South Africa's largest health insurer, Discovery Holdings, today posted a 6% rise in full-year headline earnings. Stripping out the cost of buying the UK Standard Life, the insurer said headline earnings advanced 31% as it added new clients on its medical scheme, and also we saw lower rates remained at those levels. CNBC Africa's Godfrey Mutizwa earlier spoke with the company's CEO Adrian Gore.
Across the board, it's strong. 32% up in operating profits. Normalized headline earnings per share up 31%. We've declared a dividend increase of 30%. So it's been a very strong growth. I think more important than the actual growth has been the diversity of growth. You know, it's not just our core businesses. Our emerging businesses have done brilliantly, and then we have new businesses getting traction. So it's been a really fantastic year for growth.
Yeah. What it suggests also is that you had a very strong hand on costs. Particularly in South Africa, we know inflation has been low, but still we know that there have been cost pressures inside the economy. How did you contain costs before we talk about what kind of impact you have seen that on consumers?
Look, I think in the South African businesses, we focused on quality generally. So maintaining costs, maintaining lapse rates down, you know, focusing on claims levels. So to an extent, I think if you look at the sort of actuarial build-up of the business, it has been about containing costs and getting the actual dynamics correct. But focusing on just pure expenses, given our scale, we're working harder and harder to use that scale to bring costs down. But that's a continuous battle in any business, you know, that I think we're getting on top of.
Yeah, can you give us some numbers on the cost?
Look, I think in the life insurance, in Discovery Life and Discovery Invest, generally the per unit costs were largely flat and downward, so we managed to keep them under control. In the UK, we cut the cost base of our Pru Health business by about 11%. So those are two, I think, very big businesses. In health is quite variable. So, you know, as you grow, you've got to grow the base. So generally, it was a good year from an expense perspective.
Yeah. Everyone you talk about now is talking about how the economy is in a fragile state, and everyone now is talking about potentially the global economy may be tipping into recession. How are you seeing that versus the kind of demand that you're seeing at the operational level for your products? Let's begin with South Africa and then perhaps move into the UK.
That's a very good question. I think that, look, I think in both cases, I think Discovery has tended to be strong throughout, strong in weak economies. And I think I attribute that to innovation. So if we can meet people's needs in a specific way, even in weak, difficult times, you find that we tend to grow. So we've managed to grow throughout. Having said that, there is a level of disruption. I mean, if there's a serious double dip, you know, that's kind of like, it's new kind of physics, you know, in a different world. But I would say that I think that within the realm of where we are now, the UK is going through has been through a difficult time. We've managed to actually get Pru Health to grow. So it's a long answer. The long and short of it, I would say, is that I believe, given where we're at, even in a weak economy, we can continue to grow very strongly. But I think if the economy gets particularly bad, you know, there's a double dip, then I think in a different kind of business environment. But I do think a good organisation, a good business, has the ability to grow regardless.
Yeah, and here in South Africa?
South Africa is a very good market. You know, the thing still, you know, I'm a great
lapse rates you're saying now are still down.
Lapse rates are down. Our credit card business, which is a great lead indicator for what's happening, is the performance has been exceptional. And the products that we sell, take particularly Discovery Health, these are necessities. People don't drop them easily. So even in difficult times, they tend to curtail their expenses elsewhere. They don't go out. They drive a smaller car, but they very seldom drop health cover.
Let's drop into some of the numbers. Assets under management up 21% to 50 billion rand. That's gross. Now, what are you doing there, right? Is it new products? Is it new customers? What is it that's driving that growth?
To an extent, in this year, it's just kind of everything. You know, we expanded into different countries and we got traction. The existing businesses like Discovery Health and Discovery Life, where there's big revenue, those grew dramatically. So I don't think it's any one thing. And in each of our businesses, there's been a specific focus on new products. So it has really been a year of new initiatives, growth in the existing initiatives, and as I was saying earlier, the established businesses grew, the emerging businesses got to profitability, and then the new stuff in China and the US is getting traction. So it's kind of been just growth throughout. It's been a very, very good year.
Yeah. Now, you came last year with Discovery Insure coming into the short-term market, and you're coming into a mature market in the South African market, but also at the same time, so you're coming into a market where there's a lot of competition. Tech up. How has it been? And then also, secondly, if you could give us an idea of your target.
Discovery Insure has had a brilliant couple months. I mean, we launched it at the end of May, so really it's literally 12 weeks out of the gate. Discovery Insure is doing about about 1.2 million a day of new business, so the take-up has been absolutely tremendous. You know, we're an organisation that likes to go into mature markets. We like a competitive space where we can differentiate. So we are excited about insurer. Our target, we were actually targeting 80% of what we're currently doing by the end of this year. So in other words, we are way ahead of target, way ahead. It's been the receptivity to Discovery Insure has been remarkable.
And in terms of the overall target for the company in the whole industry, what are you looking to chip away?
Typically, we like to get to 10% market share relatively quickly. If we can achieve that, I think we've done well. Having said that, though, as aggressive we are in getting the business started, realistically, businesses take 3 to 4 years to turn to profitability and get scale, and I think that will be the case with Discovery Insure.
So what's the target? You want it to be profitable in 3 to 4 years?
In 3 years, we've done well. It's such a fantastic business. If it takes a bit longer and we have to invest more, that's fine. You know, we're a big organisation. We're not trying to make a quick buck. You know, we're trying to build great businesses. But I would say that given how it's growing, if in 3 years it doesn't have scale, I don't think we've done that well.